take a look at the market today on tax day, April 15th, 2025. And it was a mixed bag overall. You did have the NASDAQ inch higher by about 18 basis points, mainly driven by Nvidia. That was the big gainer, up 1.3%. I don't say big, but Netflix also was up about 5%. So that dragged the market up, as well as Palantir up 6%. But you still had Meta, Microsoft, Google, and Apple all down. You had strength out of some of the consumer staples, as well as the banks. The banks were actually the best performers overall today. The S&P fell 17 basis points. So once again, NASDAQ up 18, S&P down 17. Certainly a mixed bag there. And we've bounced. We bounced off of support on the major indices. We're into OPEX week. Friday is option expiration, and usually you get the market kind of holding up here and potential for a shift next week. That's kind of my base case. But a lot will depend on the tariff news. And we know that this is a market that now is in a downtrend. The path of least resistance is likely lower, but doesn't mean you can't stay in a choppy upward pattern for a short period of time. And today was just kind of one of those days, a lot of chop. Now there's some optimism around, hey, discussions are being started with Japan, for example, on trade. Well, that's Japan, and we've been trying to negotiate a UK trade deal for years, and these type of trade deals, they typically do take years to try to actually solidify. So to say we have this 90-day pause on tariffs is nice, but we're still at the 10% baseline, which is much higher than the market had expected. And, you have 2/3 of people that are worried that they're going to lose their job. So naturally, that backdrop, shall we say, is more recessionary than anything else. And therefore, once you break the 200 moving average in earnest, like you did over the past few weeks, this is a market that is, once again, the path of least resistance is lower. Now, you did get some economic news. You had the April Empire State Manufacturing Index that came at negative 8.1. Now that was better than expectations, which was negative 14.5, but still you had new orders in negative 8.8. Prices paid index increased from around 45 to 50.8. So from actually shrinkage to positive there. And then prices received also went up to 28.7. So you're seeing what is a stagflationary economic backdrop, and that is typically not good for equities. So that's kind of where you're at. And remember, with this economic data, a lot of it is going to look at March. March does not matter. It's all about April. Real-time data, that's what the market is looking for. Now, tomorrow we will get, is it tomorrow? No, sorry, Thursday, we will get the unemployment claims. And then we'll get a kind of a more real-time look at what the last couple of weeks means for the overall economy and the jobs market. So that was the market today. You did get some rally in what were the other? There you go. You had. I'm trying to find the gold, and there we go. I found it. There it is. WTI, that was down 0.3%. You had gold up 0.4%. Bitcoin was down 1.2%. And treasuries were a bit stronger on yields dropping. So, nothing goes in a straight line. The dollar is still relatively weak, even though it's up 0.5% today. Treasury yields are generally rising, but a lot will depend on the market vacillating and trying to get their handle around what these tariffs mean for not just the economies today, but about what the tariff path is. We've seen a lot of changing over the past couple of weeks, and that's likely to continue. And that just kind of freezes the overall market and the overall economy. So as long as that's the case, once again, I think the path of least resistance in markets is lower.